Welcome back, DGens and traders. What a spectacular candle. I mean, what a daily candle on Bitcoin today. Breaking out to the upside, resolving the range, and absolutely pummeling the hopes of the bears who thought the pullback might be imminent. Find out how you can profit off of today's Bitcoin price breakout in today's episode of Breaking Bitcoin. Welcome back to the channel. Hopefully everybody is doing absolutely fantastic today. It is January 20th, 2023, foul year of our Lord, and Bitcoin has put in another beautiful, impressive candle, 7.52% up on the daily, breaking out above the range that we were consolidating in over the past 5 days and giving clear resolution that this uptrend is not yet over. I have been fast and furious with my trades today. I've actually had 2 trades resolved from the range and 2 trades that I put on today. We're going to go through those. We're going to go through the wins, the losses, the good, the bad. That's what you get on this channel. I don't get every trade right, but I'm honest about what I take and I do my best. So I'm going to give you guys a breakdown of what I've been doing and how my trades have been going, roughly how much P&L I've made off of these trades. And then we're also going to look at what are the opportunities moving forward and answer your questions. As always, if you guys want to support the show, right down there is the like button. It's right next to the subscribe button. That's how you can keep this channel alive with your generous and free support. If you have any questions, drop them in the chat. I'll try to get to them in due time. All right, let's get rocking, guys. Oh, this one. Okay. This is the scene we want. All right. Okay. So just what a fantastic day. This is the stuff I love. So if you guys will recall, we were talking about this yesterday. We were talking about the opportunities. And let's start off with a breakdown of the intraday. So let's go down to BTC USDT on the 15-minute time frame and just look at what we've seen so far. Let's just go ahead and take the indicators off for now and get rid of that. Okay, take the indicators off and we'll just look at basically where we've come and what's happened so far. Give my computer. I'm sorry, guys. I'm still streaming on the mobile laptop right now, so I don't have the beast computer, so you'll have to bear with me. All right, so following a beautiful run up from BTC, just a beautiful run up, we had this nice blow off followed by a quick and sharp sell off. And this, I've been asked a lot of times, Justin, how do we switch from a trend strategy to a range strategy? Again, different people will tell you different things, but this is a good thing to see. When you see a lot of volume and a huge candle that occurs at the top, so price has already been skyrocketing for a while, and then you put in a big greenie at the top with a long wick to the upside on extremely high volume, that's kind of your first telltale sign that, whoa, hey, this might be a blow off top. And then if very shortly after you get a really sharp sell off, it can happen immediately after, or there can be some consolidation. As you see, we kind of form this pennant for a while and then break down. But here again, you'll see that kind of same characteristic, very long candle body, very long price tail, and a lot of volume. That is when you can kind of deduce or assume. You have to assume, you have to guess. Trading is all about statistical guessing, all right? There's nothing out there. There's no indicator you can use. There's no trading style you can use. There's no inside information you can get that will tell you exactly which way price will go. Even if you have inside information, every moment in the market is unique, and a large trader can come in, slam a huge market order into the book, and completely crush down past where you thought price was going to go. So there's no sure games. But what you have to do is you have to assume logically, and we can assume or infer, we can bet that the market will range following this, and we'll adopt a range trading strategy where we buy over bought conditions, buy over sold conditions, and short or fade overbought opportunities. So that's what we've done throughout this range. Closer to the top of this range, so right over, let's see here. Yeah, so right around this area, we accumulated our daily reversal long, looking for that price target of 19,838. Now that obviously didn't happen. We were in profit down here. And in retrospect, what I should have done with this trade, and I didn't, but what I should have done with this trade is what I normally do with my trades, is I should have allowed myself to take 50% of the profit off near the range lows, and that would have allowed me to capitalize on this down movement. That short that we actually took here, unfortunately, ended up stopping out here at 21,652 is where we got stopped out on that that daily short. That's okay. We were obviously long on the weekly time frame. We accumulated our longs at 17,000. So we took our first profit at 19,000. We took our second profit today at 21,800, I want to say. $21,800. Yep, that is correct. I'm going to sneeze. Hold on. That's the good stuff. I took our second take profit at 21,800 on that weekly trade. That was the weekly regular bullish divergence that I was talking about for a while. So we're at TP2 on that. So traders, if you're in the premium group, if you haven't looked at the newsletter yet, or if you haven't read the market update in the Discord channel yet, make sure you update your stop loss to your first take profit, which is that $19,000 level. And then we accumulated a long down here at the range low. Lots of opportunities for that. And then as I was signing off yesterday, I said the opportunities we should be looking for, as we were still in the range yesterday, the trading opportunities were continuing to range trade. So I recommended fading anything that came to the top and longing any breakout. Okay. So the long opportunity that we accumulated at the range low did hit our take profit target. I did not take a range short because I wasn't at the computer at that time. All that happened to me today was my short from here stopped out at 21,652. My weekly long hit TP2, and I've taken two subsequent trades. I took the breakout trade because I got the notification on my phone. So I took the breakout trade on this candle. All right. And that came up here. The metrics for that, I believe, are on. Still have them on my chart. Give me a second. Oh, there we go. Yeah. Okay. I have the first trade on here, and then I actually did take a second breakout trade on this candle. And it was a much tighter metric because I was just using these lows as my stop loss, and that has hit its take profit too as well. So I am currently flat. I'm not in my breakout longs anymore. I had two successful breakout longs. Both of them netted me about $400. So I'm about $800 in profit today. Because that's the kind of risk reward ratio I'm using, $400 per trade. I can take 360 trades per year at a 65% win rate. That is going to be $93,000 in profit, less my losses. So that's going to be about $73,000 with this particular account that I'm working on building out. That is that's the goal. That's the metric. So yeah, okay. So that's where we've come. That's where we're at. One thing I want to point out that's very interesting here is that we'll notice that these breakouts tend to come in, and you guys know I'm not an Elliott wave guy, but they tend to come in waves. I like to call them legs. So, and the legs are kind of characterized by the big greenies. All right. So wait a second for this kind of back chart to load. Okay, here we go. So look at this, what Elliott wave traders, or what some traders would call an impulse movement, this impulsive movement right here, where we have leg one, phase one of the big greenies, right? And then phase two, and then phase three. And notice in this situation that phase three is actually the most significant, and it's the highest volume. So if we come over here to what's currently going on with price, we've had two legs of this breakout so far. We've had leg one and leg two. And clearly, okay, there we go. Leg one and leg two. And that's just my analysis as we're here in the moment. It is possible that we could have like a consolidation here and then a real leg two consolidation and the real leg three. And that this is all just really can be characterized by leg one. And I don't want to be too overly cautious here, but just again, right? Like, it's really easy to get captured by greed. And yeah, I mean, I feel my greed glands tickling too as well. I kind of want to long this and continue on this journey. But I'm pretty good right now. I don't want to be overly greedy. I've had a good run today. The premium groups had a good run today. And yeah, I don't really want to push it. Now, if we get a close above these resistance levels, we've got two highs right now. I'm on the Bybit chart. So we've got a high of 22,744 and we've got a high of 22,780. Now I would long those with prejudice, is what I'd do. because I want to trade in the current direction of what seems to have the most power, and that is currently to the upside. So we're going to zoom out and break everything down here, but that's where we're at right now with today's current price action and opportunities. Let's take a moment and review the chat. I see that we've got Vancity over on Twitch and Rube Life over on Twitch. Hey guys, shout outs to you. Thank you so much for joining the stream. Vancity says, I'm going to short at 22,000. Am I hooped? Okay. I'm not sure, man. I cannot predict which way the market will go, but I will talk about probability. So, okay. So if you're short from 22,000, it's not a bad trade. Okay. It's not a bad trade. I was short here in the range. I got stopped out on the breakout. And so when I look at this chart, like logically, I think, okay, I want to make sure, because it's just so hard to reprogram yourself that like we've been down only, right? And so in your mind, and then like every trader or LARPer on Twitter is like, just make sure you don't forget that ultimately we're going down. And like, that's even the stuff I've been saying, because I want you guys to be careful. I want you guys to be cautious. I don't want you guys to get in a situation where you're degen longing and then losing all your money. So it makes a lot of sense to be looking for opportunities to fade this breakout, because what we've seen, the majority of the profit potential up until the last week has been shorting. And, you profited if you were able to capitalize on opportunities where price got, overextended. People got a little euphoric and you faded that potential movement. So far, we've seen every opportunity at fading not work out. So without knowing the particular metrics of your trade, I would recommend doing exactly what I did, right? You've got to have a stop loss somewhere at some point. Unless you are convicted to Michael Burry fundamental trade this way all the way down. But here's the thing, guys. This is one of the reasons why price is pumping, and I want to talk about this, right? Why is the market pumping? Why are markets pumping in general? Well, you guys might not know this, but there is a significant change that just occurred, which is given the Federal Reserve the green light to begin turning the money printers back on and pivoting from their plan of economic tightening and moving back into a phase of economic expansion. All right. Now, this is not the takes that you were going to hear or see from almost any pundit on this issue, because they're not paying attention to the reality. They're looking at the data, but they don't understand that hearts and minds, and really policy, is not one on data. Hearts and minds are swayed by emotion. And when you utilize emotion to sway people, there is an element of trickery in there. There is an element of illusion, right? Like you see what the camera lets you see. Okay. You guys don't know I've got an amazing filter on, and in reality, I'm actually attractive. It's the filter that makes me look so ugly, right? So the Federal Reserve has said continuously throughout this year that they are committed to taming inflation regardless of the costs. And that means higher unemployment, lowered wages, and higher and decreased economic opportunity, and a crushed risk on asset marketplace. That is what is generally necessary to tame inflation. And the reality is CPI as a measure of inflation is a horrible metric that is easily manipulated, and it's been manipulated over and over and over again. So up until the 80s, they didn't change the way. And by the way, just so you guys are aware of this, the Federal Reserve, the board, the Federal Reserve Board, Federal Reserve Bank, right? Jerome Powell, they do not set the metrics for CPI. That is the Bureau of Labor Statistics. All right, that's the Bureau of Labor Statistics. And up until the 80s, the Bureau of Labor Statistics tracked a basket of consumable goods a certain way. Steak, meat, milk, eggs, all that shit, right? And starting in the 80s, they started to shift that around so they could artificially print lower CPI so that they could tell us that economic conditions were better than they actually were, than people knew on the streets, right? Like what the common man knows to be true is true. And what you see on the news is not true. What they tell you on the TV is not true. It is illusion. It is trickery. Okay? Always has been. It always will be. What the politicians say on the television is not reality. It's illusion. It's trickery. And you need an element of truth to make a good lie. So CPI measured from the 80s began. So since the 80s, CPI began to be measured differently, right? So instead of, let's say, steak, they would track the price of ground beef, let's say, for example. So little tricks like that, tracking a cheaper asset, or not asset, but consumable good, to be able to artificially lower the price, to be able to lower the print of CPI, to try to tell us that inflation is lower. But something extremely significant just happened, and it's going into effect this month. And this has given the Federal Reserve the green light to shift and stop tightening. And that's the fact that they are going to change the way they calculate CPI. So up until now, the way CPI has been tracked is they measure from a certain point in time and they take the comp, which is the average of the last 2 years. And starting now, they're not going to do that. They're only going to measure year over year. And so the inflation level in 2021 reached a high of 9.2. And where we're currently at right now, if we take the average of 2020 when inflation was quite low, in 2021, that's a low number. And we're going to measure from that, where we are right now, from that low number. That's a large distance. That's a high CPI print. It's high inflation. But if we just track from here, from now till last year, when inflation topped out at 9.2, well, that's a much smaller gap. And so statistically, the numbers would say that, well, inflation has actually decreased. So just by making that change, which they've already made, you can go to the Bureau of Labor Statistics website. It is literally right on their page. It says it right there, that they are altering the way that they track CPI by getting rid of the 2-year back year comp and doing the year over year. So even if nothing changes, even if no monetary policy is made, that right there will reduce inflation because they're changing the math of how it's calculated. So I think we're going to see by the end of February, the talking heads talking about how inflation is down to 4.5%, maybe even 3%. And by the end of Q1, come spring, our CPI print is going to be down to maybe even 2%. And that's going to be the official, okay, you accomplished your goal. Good job, Jerome Powell. Inflation's down. Now turn on the money printers. And risk assets are responding. It's on, right? Like Bitcoin is responding. Gold is responding. Commodities are responding to this because the market knows that the Fed pivot is here, right? That was the meme. Oh, well, when the Fed pivots, things will go back. The Fed's pivoting. It's happening right now. So as I've said, dollar cost average into your positions, put your money to work for you. In the short term, things seem to be relatively attractive. All right. We want to be prepared for downside potential because this isn't going to run forever. We're going to have a pretty sharp leg down throughout all of this just because things are good. But what that means is that the time to begin looking for attractive positions has come. That is the fundamental catalyst that we really needed, was for the macro to shift. And it's here now. All right. Let's take a longer, sorry, you guys are just looking at me. Jesus. Okay. Sorry about that. Wow. Not even looking at the charts. This is a trading show, Justin, not an inflation show. What do you just stop talking, man? Oh my God, this dude just. All right. My silly man. Welcome to the channel, my friend. He says, can you check the weekly on Bitcoin? It looks like we hit resistance again. We've been hitting resistance after resistance after resistance. And let me tell you something about Bitcoin. Honey Badger don't care. She just don't care, man. Honey Badger don't care. No, for real. Okay. So now that we're here, let's zoom out and get our bearings about us. All right. Like after that, like, geez, Justin, you really went off the deep end there about the inflation. Like, oh my God, dude, like tell us how you really feel about Jerome Powell. Let's go to the Bitstamp chart so we can track our big weekly metrics here. And again, so we are in a weekly bearish shift. All right. So the weekly bearish trend was confirmed when we began trading underneath the weekly Tenkan-san leading line and the 21 weekly exponential moving average, the WEMA. And you can notice that particularly the Tenkan-san leading line, which is this blue line on my chart, was dominant, absolutely dictated where bear market rallies would stop. Bam, bam. And then we have the collapse of FTX. Nice little run up here, 3-week run up, bear market rally, and then bam, the collapse of FTX. And now we have completely overtaken that level. We are now trading above the Tenkan-san leading line. And we are also now trading above all of our faster moving averages and the 21 exponential moving average. I do expect to see our first real big level of resistance following this. This was the big baby to overcome. And now it's really the 200 weekly simple moving average coming in at around 24,500. We have confluence there with the 55 weekly exponential moving average as well. Those are all kind of lining up right there as well. And that's pretty much where we're going for. If we look at volume, visible range volume profile as well, you can see here that is also, you can see this high volume node here on the side. This is where that high volume node ends. So I do expect to see wicks up into the lower area of this low volume node. And then the best case scenario, like the big best case scenario for the bull laws would be sideways consolidation at that point. And then we just tear right through that low volume node up to about 30,000. But I do think we are going to have some pretty violent catastrophic pullback. We can't even go down to 12 to 13,000. I'm not lying, guys. Like we could still, and Alex, I think, pointed it out very well. Alex81SG, a longtime viewer of the show, member of the Trading and Investment Group, becoming honestly a really fantastic analyst in his own right. I mean, his kind of thesis is that we run into resistance here and then they pull the bottom out. Right. So, but it doesn't really matter. Right. Again, I think that overriding, we've got this really strong Fed pivot and that might take us a while, but that just really accelerated my bullishness for 2023. It really did. Right. I would really like to see the beginning of the bull market come the end of Q1 2023. So that just means, guys, we've got like 3 months. We just got to make it through 3 months of craziness. And then you can basically probably just set it and forget it long. We'll see. Subject to change. Things change, but we'll see. All right. And then, yes, we can look at our, let's go to BTC USDT and we can look at our current levels of horizontal support and resistance. Let's do this on the daily. Yeah, so you can see I've got our first major level of resistance up at about 24,500. And we just had a daily close today at 22,667. Immediately starting to see a little bit of pullback. We almost always see selling at the daily close for reasons. Because automated strategies close at the daily close. That's why. Our first intraday level of support is around 22,200. So I'll show you guys what that looks like. Where's that at right now? It's right here. So we established this shelf on the run up pullback. So our first, I would say, intraday level of support, unless you want to consider like this current low, like 22,519. That's like our current intraday level of support. And then further intraday support down here at about 22,200 to really kind of break up the advance. So what would be really beautiful to see here is like a sharp sell-off. Yeah. So we'll go short half a Bitcoin here. I hope. That went through. Let's refresh. Again, sorry, my computer's just so finicky right now. And then we'll go ahead and calc our metrics out for that. Let's go ahead and grab, we're going to need the ATR. Show you guys how I do this. So we're going to grab the ATR indicator. And we're going to grab the current value of the ATR, which is 135.57. And we're going to take this high. So we'll just grab a calculator. And we're going to add the current high, 22,755.93. And that's going to be 22,891.50. That's going to be our stop loss, 22,891.50. Yeah, this is like really bad. I got to get my good computer, guys. I've lost like I've made quite a bit of money in this, but I've lost like $700 due to like my computer being laggy. It's really bad. I'm so used to having like my beast machine and it's just like, go, you know, like, rah, rah, rah. All right, we'll give that a second. What did I say here? 22,891.50. Okay, and wow, like this is how I've lost money. Oh. I also lose money when I take the wrong trade. Two ways to lose money. Uh, 22,891.50, and you're killing me, but you're killing me, Bybit. You're making me look bad in front of all my friends right now. Okay, so we're just gonna guess that it was about 22,668.45. And what do we need to make money off of that? We basically need price to come down here close to the bottom of the range. So we need like a 2% movement, 22,239. Or we see a close and we ditch that position and we go long. All right, that's what we're doing here, guys. So like wicks, short, closes, drop and go long. Wow, really, Bybit? Come on, man. We are gonna try another refresh. Painful. Oh god. Okay. Mystery the Robert Warner says we are rounding up now, and that's what we did in the other bull runs. When Revolution. Vancity, CPI, Mind, wow, Mind Blow. Thanks so much, man. No problem, dude. Do I think current levels of XTP is a good entry? I'm not trading altcoins right now. I am just kind of focusing on, I'm just going to be mainly focusing on Bitcoin day trading and higher picture day trading right now. I do plan to be trading daily positions with the PTP strategy, but I have a lot of that automated, and I've got a basket of 10 assets right now, crypto assets that I'm trading. All right, here's what we're gonna do. I can't do it. You know, it's not slow. I'm mobile. Meanwhile, while we wait, how are you guys doing? Have you guys had any good trades? How has this bull market been treating you? And the new candle begins. Yes. It's the computer. It is. It's absolutely the computer. It's absolutely the computer. Actually, I'm not gonna lie. I think it's Bybit right now because my mobile just timed out trying to log into their server, so they are getting hit. Need to upgrade from that Azure to that AWS, man. You're losing me money, Bybit. And that's usually never the case. They're usually like speedy. You know what I think it is though? I think that so much business has fled obviously from FTX and Bybit, or excuse me, Binance. Derivatives, open positions, great. And we just want to set a TP stop loss. And we're going to set our stop loss at 22,891.50. Sorry, guys. Thank you for rocking with me. I know. And we're going to set a take profit at 22,239. And we're going to confirm. So again, that is a movement of 1.89%. So if my entry price was about, what did I say, 22,666? Let's do it. And I took half a Bitcoin, so half of that. And then if I have a 0.0134 movement, only $150. I should have shorted the whole Bitcoin. That would have given me $300 profit. And again, kind of the goal this year is to be shooting for $400 on all my take profits and $200 on my stop losses. Again, if I can do that 360 times this year with a win rate of 65%, I'll make $75,000 this year. Great. That's the goal. That's what we're doing, guys. I've obviously made a lot more than that from trading in a year. But, you know, hey. That is the game plan. And that's not too hard. That's not too difficult. All right, cool. I've got that all set, guys. As you can see, yeah, like it was super snappy on my mobile. Not an issue. Even when I got that network timeout, like it said, oh, timeout, but then it took me to the capture screen. So whatever. All right, here we are. Let's break this down, guys. I got to go make dinner here pretty soon. And again, we are kind of keeping these streams short, punctual, and to the point. I'm just trying to show you guys the big opportunities and what's going on. So at this point, as you guys saw, I was already kind of watching kind of the exhaustion, and then the daily close came, and we immediately started to see the sell off. And I speculatively took a short, right? I was willing to drop that short on any candle close above this level of resistance. That's not what happened. We are currently getting follow through. I'd like price to come down here to my take profit target and sweep these lows. And then ideally, this is what I would love to fucking happen. I would love for this to come down to my take profit target. And then I'd like that to happen on high volume and high volatility. And then let's actually go to my day trading setup. And then what I would love to see is a range established, giving me lots of opportunities to range trade Bitcoin again. Very similar to what we saw for about 5 days here. Right here. And then we play the breakdown or we play the breakout. It's not, listen guys, like once you confine yourself to just particular setups to particular trades, it's really not that hard. Because my weekly trade is just going to run, and PTP is not going to give me another signal unless price pulls back. Let's just double check here. Yeah, or maybe after today's close, right? Like I need this continuation signal to happen. I need this line to cross above this line. Other than that, everything's pretty good. But I can't take that PTP trade until that signal happens. Jack's got 26 X bot trades, which are down 60%. Thanks for nothing. 3 commas. Listen, I am more bullish of the opinion that you can likely hold if you're willing to hold. Again, I hate giving guarantees about the market because I don't know, man. Like I could be completely wrong. The market could react negatively to the Fed pivot still. And like I said, we could still go down to 12, 13,000. But I think if you can hold out, man, until the end of Q1, we're going to see a lot of recovery. Mr. Ether has his Bybit on a VPS and it's always on and I can access it from my PC and my phone. You know, hey, would you mind messaging me a little bit of more info on that? Because I would really love to get that set up for myself. Rube Life over in Twitch doing good. Still wish I knew more about trading and where to start. Hey, you know, there's a really good place. Obviously, I'm biased, but check out our Trading Crypto 101 channel. There's a lot of good material on our website, KrakenCryptocurrency.com. I've got a lot of free blog articles on our website. If you go to KrakenCryptocurrency.com, oh, look, our website's right here. I swear it doesn't load this slow, just only on my computer. So I just recently published, this is my new course on how to set up a Bitwarden self-hosted on your own private server. This course is completely free. But if you come over here to our blog, I've got tons of articles, market updates, things where I look in the market, and that can be a really good place for you to look. This is just, you can see how I think about the markets, the things that I look at, the metrics I watch, and there's tons of them. Just tons of these blog articles that you can go read. And then we've got, and then join our Discord, man. Join our Discord. We're all in there. And if you ever want to kind of upgrade, we have paid options. We've got our trading group. We've got paid courses. There's all kinds of material on our website. So, but I definitely start with our free material. Check out our Trading Crypto 101 playlist and check out our free blogs and some of our free courses, and then just go from there, man. It's a beautiful game. Oh, cool. Good to have you back, man. Good to have you back. All right. You guys have been really good. This is a fun show. Let's do a wrap up. What am I watching for? What am I watching for right now? Again, I'm playing this current rejection right now. Daily close, usually get a nice pullback. And we were kind of overextended on this leg. One thing that I don't want to like, I don't want to, you know, or celtilize it too hard. But we were getting here on the Stotch. This is the stochastic RSI, which I do use on my intraday setup. We did get regular bearish divergence. You can see we had a higher high, but a lower high. And so I saw that earlier when I was writing out my market update for the Discord and for my newsletter today. And I was like, you know, but I was expecting there to be like another leg up, which there still could be, and then rejection off that leg. But I would love for a range to establish here because I like trading ranges right now with BBWP and Stotch, and then we'll go from there. So I also might just, you know what? Nope. Just going to leave my trade exactly how it is. It's either going to happen or it's not. And then if we close above this current high, I would long another breakout because there's fuel in the fire right now. Okay, guys. Thank you so much. Whoa. This button. I'll wait. There we go. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, if you have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section after the show. I'll do my best to review them. Make sure to join our Discord, check out our website. And by the way, I highly recommend you guys go check out my new guide, The 5 Mistakes Holding You Back from Profitable Trading. First link in the description down below, 5mistakes.crackingcryptocurrency.com. I've compiled a lot of the education, advice, questions, problems that I've seen with other traders over my last 5 years of mentoring professionally, thousands of students across the world. And I've put them into this guide. This guide's completely free. You guys can go get it at the website. And I hope it helps you out as much as it helped me out to write it. So other than that, guys, we will be back on Monday. Same crypto time, same crypto network. Of course, there will be updates in the Discord for the premium members. And until next time, trade safely, and I'll see you on the next one. Cheers, guys.
Thank you.